Hello guys, it's Mark Parham here. I'm a property investor and entrepreneur and I am back. It's been a while. I've moved to Dubai and I'm going to give you a big life update. Not in this video because this is all about house prices, but in Saturday's video. So Tom has flown out, my videographer, to Dubai. He's spending this week with me and we're going to pretty much film, edit and upload in real time. So today is Wednesday or is it Thursday, Tom? Thursday. So today's the 8th. You're going to see this video, hopefully today on the 8th, right, Tom? Mm-hmm. You're committing? Mm-hmm. We've done it. Mm-hmm. So today we're going to give you the update on the house price. On Saturday, I'm going to give you an update of my life, what's been going on. I'll show you around my property. I'll show you around my car, a little bit about life in Dubai and how I'm finding things and be a little bit honest and open about that. And we'll also be able to give away some dividends because our dividend portfolio, I haven't given any money away for the last couple of months. So there's gonna be 50, 60, 70 quid for me to pay out to my subscribers as always. But this time, what I want you to do is just leave a comment on this video. If you like and comment this video, you'll automatically be entered into the draw. And on Saturday, we will do that draw and pay out that money to whoever wins. And it will all be done in pretty much real time. But let's get into the video. Let's talk about what's going on with house prices because it's been a big month. Minus 1.9% for the UK property market. That represents an almost 2% change to the downside. Now for me with £3.5 million worth of property, that's going to be about 70 grand or so. So that's a big change in my equity value, not positive at all. But it's not all bad news because my rents are rising. And even last month, we managed to put up a couple more of our properties by about 10%. So we are still raising our rents, and the income is increasing. At the same time, our mortgages are going up and we're not making any more money really at the moment, but we are staying well above water. We're still making money. It's all positive. But I think now is a great time for us to be talking about the opportunity that's ahead of us, especially with these house prices coming down a little bit. Because whilst the annual change on here, 4.6%, if we look at UK inflation, which in the 12 months up until July was 6.8%, well, what's that? Nearly 11% of change in terms of real terms. So nominal change, 4.6% to the downside, but real terms over the last year, 11% down. So just to explain very, very briefly what I mean about nominal and real terms, just in case some people don't understand that completely, when you take into consideration inflation, this is giving you the real terms adjusted price. So if inflation, i.e. the value of your currency has come down, or the value of goods and services have gone up, depending on which way you look at it, if that's happened, then relatively speaking, property prices have changed to the downside because they haven't risen in line with inflation. So we have inflation plus the downside in order to take that into consideration. Now, inflation, if it had run at 4% and the annual change was 4% to the positive, then we'd have a real terms change of 0. You know, that would be as simple as that. But in this instance, we've got a real terms change of over 11%. And it's really important to remember when investing in property, inflation is your friend. It eats away at the debt and it does as a whole affect prices to the upside. So nominally, if you invest and you have a £100,000 house, inflation runs at 2% over the course of a year. Just in real terms alone, it's likely that that property will be worth 130,000 by the end of it, the 2% compounding. However, your debt, let's say for example, you took out a 100% loan, would have gone down by 30k and you'd only have about 70k worth of debt in real terms. So you'd have that spread. So inflation is your friend for property investing over the long term in generally speaking, especially if you're taking out mortgages. So let's have a look at these headline notes and see exactly what Halifax has been reporting on. Average house price down by 1.9% in August. Now that represents the largest monthly fall since November 2022. We already know that, and that was the largest fall since I think 2009 if I remember rightly. Property prices dropped by 4.6% on an annualized basis, but remembering house prices were at record peak the year before, so it is important to remember that we are comparing peak with trough, but the monthly basis is more interesting because the 1.9% is month on month. Typical home now costs 279,000. Down by around 14,000 over the period of last year. Yeah, obviously that's now seeing it back to the level in early 2022. But average house prices remain around 40% above pre-pandemic levels. So we have still had growth over the last 3 years. But it's easy to forget that 3 years have passed, right? We're now towards the end, or coming towards the end of 2023, and COVID was, what, February, March 2020? So yeah, we are coming towards the end of 3 years. So it's been a long 3 years, I'll tell you that much. Southern England and Wales seeing the most downward pressure on property. Pretty obvious, higher prices, higher mortgages, bigger borrowings, raising interest rates is going to have a much greater effect on that cohort of property owners. Guys, sorry to interrupt this video, but I wanted to give you this information and I promise it'll be no more than 15 seconds. If you want to have a free one-to-one consultation with me, a quick chat about anything at all you need to do is click the link in the description. It will give you a quick form, fill out your details, Tom will get in contact and book it into my calendar with me, then we can have a free consultation. I'm doing this for anybody who wants to talk to me until I get to 10,000 subscribers. So guys, let's get back to the video, but fill in the form, have a chat. One of the things I'm going to tell you on this channel, be really open and transparent, is I'm still buying. I'm still looking for where I see value. And properties in Sheffield, I've just bought a 3-bedroom house for £110,000. Needed a little bit of work, not massive, but it's still miles below the national average. Rents are strong. I'm getting 10 to 12% ROI on a cash-on-cash basis. And I still think there's lots of room for that to grow. In terms of the Sheffield market, not much drop at all, if any. I don't know, that's what I'm trying to see on here, whether there's any reference to the regionality of it. And here we are, we've got some reference here. All UK nations and the 9 English ratings had a decline, okay? But however, northern locations generally proving to be more resilient than southern, as we would expect. The southeast has fallen by 5% on an annualised basis. It doesn't say anything. Northern Ireland, 0.4. Scotland only 0.6, right? So ultimately, I know up north where I'm investing, Sheffield, for example, we have very few, if any, declines. 0.6% sounds about the sort of number. I know that's Scotland's number, and it doesn't say the northern number on here, but it's going to be somewhere around that sort of number. It's very, very low. Now, London, still the most expensive place to own a home in the UK. Obviously, we'd expect that. Let's have a look at HMRC data. It says sales were up by almost 1%, which is interesting. So sales are continuing to grow. However, quarterly transactions were down 3.3% against the previous 3 months and 16.3% lower than July 2022. Bank of England, finance year on year down 21%. Mortgage rates go up. Less people want to take out loans. Quite obvious. And that does stagnate the market. Again, if you're going to move house and you've got fixed in a cheap rate for 5 years, you would have to refix when you move and buy a new home at a new rate. So that will put off people from moving home. Some people have even longer term mortgages, and some people have some great trackers linked in at very, very low tracker rates. And although they've gone up, they still represent really good value for money. And I know some people who would be very reluctant to let that debt go. So basically, it's pretty much from a price perspective, all negative news. From a buyer's perspective though, that creates opportunity. And for me, as I said, I've just bought a property up in Sheffield in the last couple of months. That's been completed on. I've done the renovation, it's all ready, it's got tenants in it. We rented it out in record time for record money. So I think there's still a great opportunity out there. So guys, I'm really excited to be back. As I said, I will make sure that I record, edit and upload at least 3 times a week. Like and subscribe as always. Comment on this video, win some money, why the hell not? Make sure that you're in that competition. Saturday, come back, see what's going on in my life. I will be honest, update you, tell you everything that's been going on. And I can't wait, guys, to show you a little bit about how my life has changed and what I've been up to. I'll see you soon, guys.